Hey everyone, welcome back to Corporate Decoder, the place where we decode the world of business. And today we're diving deep into Estée Lauder's latest 10K filing. Get ready because this report shows some major ups and downs, and we're going to break it all down in plain English so you can understand exactly what's happening behind the scenes with this beauty giant. We're going to look at their sales, their profits, and the big risks they're facing. So buckle up and don't forget to subscribe and join our Discord community, linked in the description below to keep up with all our latest corporate deep dives. Estée Lauder is a huge name in beauty with over 20 luxury brands, and they operate in about 150 countries. They're known for brands like Estée Lauder, Clinique, MAC, and La Mer, among many others. They've been around since 1946, and the Lauder family still holds a significant amount of control. Now their business covers four main areas: skincare, makeup, fragrance, and hair care. They also have an other category which includes royalty revenue from their acquisition of the Tom Ford brand. They've got a really diverse brand portfolio, from luxury names like these to more accessible brands. This is a key part of their strategy to appeal to a wide range of consumers. Some of their top brands include Estée, Lauder, La Mer, Clinique, and MAC. They also have popular scaling brands like Tom Ford and Aveda. Their skincare line is quite extensive, with everything from moisturizers and serums to acne treatments and sun care. In makeup, they offer a full range of products, including foundations, lipsticks, and mascaras. Fragrance is also a significant category, with their scents coming in various forms like perfumes and lotions and even candles. And their hair care includes shampoos, conditioners, and styling products. Estée Lauder is also focusing on social impact and sustainability, integrating these into their business. They're working on climate and energy reduction packaging, sourcing green chemistry, and inclusion. Their products are sold through a mix of channels, including department stores, specialty retailers, online platforms, and even their own freestanding stores. They operate about 1,600 freestanding stores globally, with many of them focusing on a single brand. Their marketing strategy is all about putting the consumer first. They use a high-touch approach, meaning personalized experiences through product specialists and technology. They're also leveraging AI to improve personalization and speed up their marketing efforts. The company invests heavily in research and development, with around 1,100 employees dedicated to product and packaging innovation. Their R&D costs were about $316 million for fiscal 2025. Estée Lauder has manufacturing facilities in the Americas, Europe, and Asia Pacific, and they also use third-party manufacturers. They're focused on improving efficiency and reducing their environmental impact while ensuring they have enough product to meet demand. This is where things get really interesting. Estée Lauder faces stiff competition from major global players like L'Oréal, Unilever, Procter & Gamble, and Shiseido. They also compete with numerous smaller indie brands and retailers with their own beauty lines. The beauty market is very competitive, and success depends on brand recognition, quality distribution, and effective marketing. Now let's talk about risks. The company points out that the beauty business is highly competitive, and they need to keep up with changing consumer preferences and industry trends. They also mention that social media and evolving technologies like AI can impact their reputation. If their reputation takes a hit, it could affect their ability to attract customers and employees. This is a big one. They admit that consumer preferences are hard to predict and change fast. If they can't keep up with these changes, they could suffer. They also note the risk of being too dependent on a few big retailers and how the health of those retailers directly impacts their business. Their long-term strategy involves big investments in new capabilities, brands, technologies, and markets. These investments might hurt their earnings in the short term, and there's no guarantee they'll pay off. This is a classic corporate risk. Acquiring or selling brands comes with integration challenges, loss of key employees, and potential damage to business relationships. Plus, they've had to record goodwill and intangible asset impairment charges in recent years because the value of some of their brands has decreased. They're talking about AI here and how using it brings risks like harmful content inaccuracies bias or even intellectual property issues. Plus, AI could make cybersecurity threats even worse. Like many companies, Estée Lauder relies heavily on its IT systems. Any cybersecurity incident or system failure could seriously disrupt their business, leading to significant expenses and damage to their reputation. They've experienced cybersecurity incidents, but say none have materially affected their business strategy, financial condition, or results of operations so far. This is important. The Lauder family owns about 84% of the voting power thanks to their dual-class stock structure. This means they have a lot of say in how the company is run, which can be a good thing for stability, but it also means minority shareholders may have less influence. Alright, let's dive into the numbers. This is where we see how the company is actually doing. Looking at the table for fiscal 2025, their net sales were about $14.3 billion. That's a drop from $15.6 billion in 2024 and $15.9 billion in 2023. This shows a clear downward trend in sales. Their operating income shows a similar pattern. In fiscal 2025, they had an operating loss of $85 million. This is a huge change from an operating income of $970 million in 2024 and $59 million, $170 million in 2023. This decline is dramatic and linked to several factors. A big reason for the financial pain in fiscal 2025 is the impairment of other intangible assets, which hit $1.273 billion. That's a massive increase from $180 million in 2024 and $27 million in 2023. This indicates that some of their brands like Tom Ford, Dr. Jart, and Too Faced are not performing as well as expected, and their value has decreased significantly on paper. They also recorded $159 million for talcum litigation settlement agreements. This is a new charge this year and represents legal settlements related to cosmetic talcum powder products. All these factors contributed to a net loss of $1.133 billion in fiscal 2025. This is a stark contrast to their net earnings of $390 million in 2024 and to $10.6 million in 2023. This means for every dollar of sales, they are losing money overall. Let's break down the sales by product category. Skincare sales fell by 12%, mainly due to weaker performance from Estée Lauder and La Mer, especially in Asia travel retail. Makeup sales dropped 6%, driven by lower sales from MAC, Too Faced and Bobbi Brown. Fragrance sales barely budged up slightly. Hair care sales also decreased by 10%. Looking at their sales by region, all areas saw decreases. The Americas sales were down 4%. Europe, Middle East, and Africa dropped 12%, and Asia Pacific decreased 7%. This widespread decline highlights the challenges they're facing across the board. Despite the sales drop, their gross margin actually improved to 74.0% in fiscal 2025 from 71.7% in fiscal 2024. This is a positive sign, usually meaning they're managing their cost of goods sold better or have raised prices. They attribute this to cost efficiencies and reduced obsolescence charges. However, operating expenses as a percentage of sales shot up to 79.4% in fiscal 2025 from 65.4% in fiscal 2024. This is because of those massive impairment charges we talked about and restructuring costs. Even though the underlying operating business might have smaller expense reductions, the sheer size of these charges is what's driving this increase. This explains why their operating income turned into a significant loss. The company's overall direction is concerning as their revenue is down and their expenses, particularly due to impairments, are way up, leading to a substantial net loss. They also established a US valuation allowance of $172 million against certain tax credits. This means they don't think they'll be able to use these credits because they're not generating enough taxable income, which is another red flag about their profitability. Estée Lauder is undergoing a major restructuring called Beauty Reimagined. This plan aims to cut costs, improve efficiency, and drive growth. They've had to reduce a significant number of positions globally, with estimates ranging from 588 final to 7,000 positions, which is about 9 to 11% of their workforce. This restructuring is expected to cost between $1.2 billion and $1.6 billion before taxes, but they anticipate annual gross benefits of up to $1 billion once it's fully implemented. This is a bold move to try and turn the company around. The impairment charges are a huge story here. For Tom Ford, they recorded a $773 million impairment charge for the trademark. For Too Faced, they took an impairment charge of $75 million for the trademark and $13 million for goodwill. And for Dr. Jart, they impaired the trademark by $83 million and long-lived assets, including customer lists, by $292 million. These numbers signal serious challenges for some of their key brands. Financially, they have about $2.9 billion in cash and cash equivalents, which seems healthy, but it's down from $3.4 billion in the prior year. They believe their cash operations and credit lines are enough to meet their needs, but the drop in cash and the major losses are definitely something to watch. Their credit ratings are something to note. As of August 2025, their long-term debt is rated A- by Standard & Poor's and A3 by Moody's, both with a negative outlook. This negative outlook suggests that these agencies are concerned about the company's future financial health. Looking at their cash flow from operations, it significantly decreased to $1.272 billion in fiscal 2025, down from $2.360 billion in 2024. This is directly related to their lower earnings. The company also spends a good amount on stock-based compensation, with over $300 million in expense recorded in fiscal 2025. This is a common practice to incentivize employees, but it does represent a real cost to the business. They've got a lot of commitments, including debt obligations, purchase obligations, and unrecognized tax benefits. This is typical for a company of their size, but it's worth noting the sheer volume of these obligations. Estée Lauder is facing a securities class action lawsuit and several stockholder derivative actions. These are related to allegations of making false and misleading statements that inflated their stock price and claims of breach of fiduciary duty by officers and directors. These legal battles can be costly and time-consuming. They are also dealing with a significant number of cases related to cosmetic talcum powder products allegedly contaminated with asbestos. They've reached settlement agreements to resolve over 200 pending matters and potential future claims. This is a costly legal issue with ongoing implications. Digging into the segment data, we see the same story. Skincare, makeup, and fragrance segments all reported operating losses in fiscal 2025, after excluding restructuring charges and impairments, which were significant across the board, further showing the widespread operational challenges. Overall, it's a story here. So what's the story here? Estée Lauder is a strong brand with a great portfolio, but they are definitely facing significant headwinds. The massive impairment charges on brands like Tom Ford, Dr. Jart, and Too Faced signal that their strategy is not working as well as hoped for these specific brands. This, combined with declining sales and the ongoing restructuring effort, paints a picture of a company in transition but facing a tough road ahead. The beauty market is as competitive as ever, and adapting to changing consumer preferences and economic conditions is proving difficult. While their gross margin improvement is a good sign, their massive operating expenses driven by impairments and restructuring paint a concerning picture for profitability in the short term. Their future depends heavily on the success of the Beauty Reimagined strategy and whether they can effectively manage those restructuring costs and boost sales across their portfolio. The legal challenges are an additional concern that adds to the uncertainty. Overall, Estée Lauder is a solid company with strong brands, but they're in for a challenging period as they navigate these significant strategic and financial. That's our deep dive into Estée Lauder's 10K filing. What do you think about their financial performance and their restructuring plans? Let us know in the comments below. If you found this breakdown helpful, give us a thumbs up and subscribe for more corporate investigations. And don't forget to join our Discord community to keep the conversation going. Thanks for watching, and we'll see you in the next video.